Hello and welcome to the Energy Connect studio at Gastech 2025 in Milan. I'm delighted to have sitting next to me in the studio today, Porsborg-Smith, Managing Director and Partner at Boston Consulting Group. Thank you so much, Anders, for being with us today.
Thank you. Thank you very much.
To start off, could you give us insights into how market shifts and geopolitics have reshaped the global energy trade?
I think this is an excellent question, right? And probably one of the questions we get most these days, right? We see a multitude of geopolitical themes, right? Shaping energy markets, right? Ranging from, of course, the very obvious one of Ukraine, Russia, right? Which, of course, particularly on the LNG side, has had a huge impact on, with the curtailment of Russian flows and in a way the sanctions and how we see, in a way, the reshapement of that. But also earlier this year when we had the Middle Eastern tension, the war in Gaza, and I think some of the smaller skirmishes that we're seeing throughout the world, right, is really elevating, I think, the risk premium, and to some degree showing how fragile but also how flexible the global energy market has become, right? Particularly LNG and oil markets, right, in general, where we are in a way in a situation where even though there is a lot more risk and feels like a lot more elevated risk, and we see clients discussing that a lot, we also see that in many ways the markets are able to adapt quite well, right? Which is a representation of again, the evolution of market dynamics that we would not have seen 10, 15 years ago, right? In a more rigid and inflexible system. So in many ways, right? I mean, these themes across the world, right, are really having an impact, and we see that also in how they're carried out on contractual basis, right? How companies are discussing cases that were traditionally not discussed very much in contracts, right? And how they're amending, GTCs to make sure they can reflect these more obscure situations, right? So definitely has a big impact, and we expect this to continue far out in the future.
And one of the outcomes of that is also how it's reshaping the global forecast for demand for LNG. And what are your thoughts on it, and where do you see, what are the primary regions that you see driving that growth?
Yeah. No, so I mean, I think we are probably one of the companies that have the most bullish outview of LNG, right, and gas in general. We think, a number of things driving it, right, but predominantly, of course, we have a very, very strong growth in AI and AI-related energy needs. That has really been a surprise, I think, to many, how quickly that has come and how exponential that has evolved, right, and that trend will very likely continue into far out in the future. We also see that even though we are very bullish also on the renewable generation, we start to hit some curtailment points where grid is getting overloaded. When we start to hit penetration levels of 60+%, we start to see that it's challenging, right, to put more renewables in without the right infrastructure developments, without more flexibility on the demand side and batteries. And we haven't quite gotten to a situation where the world has cracked that fully. And of course, one of the immediate resources that helps that is natural gas to power generation, right? So it's really been a comeback. And as the only alternative to coal and you could say that longer seasonal development, I think that really in many ways has surprised also in our view, right, and our forecast, driven up the long-term projections of why we are, in a way bullish on the long-term growth. I think country-wise, I mean, we see that as well, right? It's very much Asia-driven, right? We see, when you look at all the forecasts, right, China, of course, being a huge engine, right, of how we expect that long-term development and the long-term needs. India increasingly so, right, but also Southeast Asia, right, increasingly. We're having conversations with a lot of government officials, a lot of energy companies there, that all are, in a way, laying out the pathways for how they want to invest in the next 10, 15, 20 years, which is a really long-term, you could say, investment of infrastructure and also sourcing. Even in pockets of the Middle East, right, there are these developments. I think what surprises sometimes people is when we look at Africa as a continent, right, because we're used to thinking of those as of that continent as an exporter. And very much a strong exporter of energy also in the future. But of course, there are also scenarios where we start to see economic development and, again, resource requirements for domestic development, meaning that they're going to have to make some tough choices in terms of how much to export versus how much to keep domestically. And I think that will surprise a lot, right? We're already seeing early signs of this, right? For example, in Algeria and some of these countries that are doing quite well, where, pipeline gas to Europe is slowly decreasing. But we expect to see that also with the development of Nigeria and the development of South Africa and other countries, right, where, again, this GDP development is likely to surprise upwards and also require more energy to fuel that in the future, right? So Africa as a whole, I think, will also be a slightly, in a way, a factor in how that demand will shape for the future. And then lastly, of course, also South America, right, where we see a similar development as elsewhere, right? There's a huge energy need, and gas and LNG is very much the fuel that helps plug a big part of that baseload gap.
So you spoke about the potential for natural gas and the opportunities there, but also looking at the supply side, what are some of the challenges and the risks that global projects face?
I mean, right now we have the biggest theme, right? Everybody's talking about it here at the conference, right? We see that this whole glut, supply glut, oversupply, right? We see every other sentence is about will it come, will it not come, and how deep will it be? People are worried. We see it priced into the forward curve right now that there's a backwardated structure, right? And people are expecting, in a way, some easement to come towards 2030. So I think that's a big concern, right? When we look at the pipeline of projects that are coming online, is that they're commercially, technically very well funded. I think also developed. I think most companies have an appetite because they see the long-term development and the profit pools growing quite hastily. But I think the whole de-risking from a commercial standpoint and how we think about the financing in a way against a commercially de-risked project is one of the biggest hurdles, right, that exist right now. We think there's a huge demarcation between, of course, the integrated projects, where we have captive upstream gas developments like we have in Africa, like we have in pockets of Australia and in the Middle East, and the US export, where the feed gas is very much tied to the Henry Hub indexation. And the competition around these projects is extremely high, right? They're very, very slim margins for whether or not you're going to be successful, whether or not the margins and the returns are going to be acceptable. So here, I think most companies really have a struggle to find the right way of in a way, de-risking without giving too much value away, and at the same time also pushing them across FID and into development going forward.
And then what would be your thoughts and strategies recommending like this balancing act that you're talking about?
No, I think as with most things, right, it is a balancing act, right? So I think here for the companies that in a way will be successful, I think there's a number of things that are possible, right? I think there's a toolbox of de-risking, right, ranging from, of course, very much farm downs, right, and in a way sell-offs and offtake agreements, third-party integration, right, to basically hedging through, of course, whatever liquid contracts exist out there, right? Particularly in this period where everybody is deeming the risky period of the next 4 to 5 years, right? We think that very much has merit as well. From our point of view, we do expect that most companies will do a mix of these things, right? I mean, I think a lot of companies are predominantly looking at the classical ways of, we want to divest part of the investments, right, to owners, where we're going to, in a way, monetize and fund our own stakes, but also, in a way, share the risk. I think the bigger companies with the bigger portfolios have more options because, of course, they have risk that they can wrap into the broader portfolio, where there's a natural diversification. They have a natural de-risking also from the integration into third-party and downstream and the long-term contracts that they already have signed. So I think smaller companies are going to be more prone to basically divesting and eventually seeking more aggressive hedging measures, right, to get projects across the line.
Anders, it's been such a pleasure speaking to you, and thank you so much once again for coming down to the Energy Connect studio.
Thank you so much for having me. Thank you.
Thank you. Thanks for watching, and you can get comprehensive coverage of the energy industry at energyconnects.com. Don't forget to follow us on social media, and I'll be back with more studio interviews from Gastech 2025 in Milan. Stay tuned.